Hello guys, glad to have you on board again today. Really sorry I totally forgot about recording the podcast yesterday for cryptocurrencies, but anyway, I hope you do understand that there is not much to talk about anyway. I'll try to record it right after this podcast and though publishing it like in an hour or so. Yeah, sorry, I just forgot and that's it. I just don't want to lie to you. I totally forgot by doing something different. All right, anyway, let's get straight to our today's podcast topic, which is talking about beginners level things, typically highlighting range trades, identifying trends, but trying not to profit from them. No matter how hard this is, you need to accept that fact that you need to highlight trends. Like, I want you guys to figure out if the market is trending or ranging, but I still want you not to trade those trends, even though everyone else will tell you this is what will make you money, will bring you money, you need to trade trends, stuff like that. Yeah, they might be true, or I mean, I don't even judge, but if you follow my guidelines and if you're trying to learn my strategy, then this is not how it works. With me, you get to trade those trends, obviously, but through time, you get to progress ahead of trading those trends and ending with trading the trend reversals, but only in the end and with a lot of maturity with all those intermediate contexts that you're going to have to learn in the meantime. But in order to trade ranges, you need to figure out trends. So you need to be able to highlight what a trend is, not necessarily trade it. The difference between highlighting and trading could be sounding stupid, just said it out loud, but if you think about it, there is a very fundamental difference between those two. Highlighting means just being able to pick it out of the noise of previous market moves, right? Like reading what previously happened. Trading it means anticipating it out of things that still hasn't yet happened, which is far more complicated and obviously in here far riskier. So trading trends that are still not there, it's complicated. It comes with speculative trades and stuff like that, and these are the stuff I'll teach you through time, as you will get intermediate level and eventually an expert in the end. But as you start in here, start with the beginning. The beginning is, yes, you need to highlight trends, but you still need not to trade them. So as an example, in here, we've got a beautiful trend, but all right, if you couldn't profit from it, no big deal. You can still have many trades to do in the meantime. So let's get to the point. By the way, I'm going to deal with cryptocurrencies first. Like I totally forgot to record the podcast yesterday. So there's not much to talk about, all right? So I'll do it, but anyway, let's pass on this. It was just to apologize. So let's figure out this, for example. This is the example I just took for the French users, so we're going to use the same one. Give it a second to plot. All right. So you need to answer the simple question. First of all, double click the chart. Don't have a look at the fucking momentum. That's a tip I give you. All right. Most of the time, you guys will have a look at this first. This is, absolutely not how it works. You shouldn't be looking at momentum rather than the late stages. Momentum is a confirmation risk limitation. So it doesn't come along or it might be useful at some point, but most of the time you'll have all the available informations and the necessary informations on the main chart when it comes to context highlighting. So just double click the main chart and you have more available space for this one. Anyway, let's get to do the job. So what is this? All right, you don't need to figure out much more. Remember that the way you read the market is always the same. Damn it. All right. Is always the same. You're scrolling back in time to figure out where the market made interesting stuff. Interesting stuff always happens at the context channel, so you don't nearly give a shit about whatever are the short-term moves and stuff like that. So we are currently trading in between, so close to 50%, and we're just coming from the resistant context after surging to the upside and doing such things. So in here really looks like a trend, whether you like it or not. There is not necessarily a trend breakout in here, which means this is an ugly way of trending, but still this is trending. We had a mature range, right, two opposite square signals, so which means we had somehow this big range. Hard to figure out what it looks like, but we've had this big range. I would call it this way, like this was the range we were in. It was an ugly range, but this was the structure. We just got out of here without breaking out. All right, that's it. All right, we have no trend breakout in here, but that's still trending. As you can see, the resistant context is not resistant anymore. The market is breaking the resistant context. This is where the trend triggers. So we're in trend trading here. And as I said, in here you could hardly have been profiting from this trend with a speculative, with my speculative strategy. It would have been real tough to figure this one out, but still, it's there. That's the difference. Highlighting is way easier than trading, but still, you need to be highlighting trends, not necessarily trading them. That's today's educational content purpose. So I'm going to say it all over again. Identify that is absolutely key for you, because you'll know when the next range trade will be, and you most likely know that you've got nothing to deal with those markets at the current given time. Like if I show you this and you're a beginner level type of trader, then just move the fuck away, because it's a really simple analysis in here. The previous range was in here, we broke it up with a nasty way of doing, but anyway, it's done. So it's here, highlighted. Though, how mature is this trend? Is the next question you need to figure out. That's what the strategy tells you to do. So you know that the trend is accumulation, breakout. All right, here you can barely see an accumulation in here. The breakout is probably there, but it hasn't been highlighted. So you've got a breakout. What's the next step? Divergence. All right. So do you see the market diverging right now? Not necessarily. For a pullback. I mean, the divergence can be somehow subdued, like the divergence is not visible. Remember that what I teach you is not how the market works. I don't know how the market works. All I can tell you is that most of the time the market works that way. It follows those structures, and this is the only way you can live yourself. You can accept chaos, like being surrounded by chaos, but you just have a few patterns in this chaotic structure. Though that's all you've got to slip with. And the thing in here is that, all right, maybe the divergence in here is still not yet there. Might be done in here and we'll have a divergence there. Or maybe no divergence and we're doing the pullback. Remember that the pullback rules are at least 23% Fibonacci retracement, which is in here. So we're pretty far from there. So there's probably no pullback so far. So we're still seeking for divergence in the German DAX. That's what we currently would be in. Like the breakout is clearly there. You can see the context boxes unfolding. The trend channel is catching up on us. So it's the support context moving upward. So we're definitely rising supports and we're seeking for them. So either we'll do this, like pulling back to 23% fib, or eventually even digest longer, catching up to the support context, and we'll have to make our final excess. But in the meantime, what happens right now is unclear. All you can tell as a beginner is that you don't trade now. The only way you could trade is going in here and making the pullback. So if we make the pullback and the final excess, there is where you'll be able to trade. All right? And remember that the context channel must be going in there and reverse, right? Which means this is context channel and then it reverses bearish and you'll try to catch up on this one. All right? That's how you deal with those trades. Now let's figure out a different type of movement. What if we just do this? Will you take this trade? This one. That could be somehow the same stuff. All right? That could be significantly equal or sounding like. So, no, wait. What I'm going to be doing is this one instead. All right, we go there first, then we go there and there. Do you catch up on this trade? Instead of this one. All right, it's pretty much doing the same things, but in a just slightly different structure. What's the difference between those two moves? Because you will say, all right, damn it, these are details. I don't really give a shit about detail. Yeah, you really do, because the structure is the only thing that will put you out of chaos. Or not out, but just give a little bit of order into chaos. The difference in here is that in the red scenario, you don't know if the pullback has been done in here. It could be like, I teach you that we have at least to get 50% context, but normally you need to retrace at least 23%, which we haven't done so far. So the problem is with the red context, with the red scenario, you wouldn't be sure that this would be the pullback. Like we would just be going divergence in here, pullbacking in there. That will be a bullish trade though. And if you try to catch the trade in here, you'll be trading a range inside a pullback. Remember what I told you was last week, or eventually the week before? That's I told you that your worst enemy when it comes to range trading is to range trade pullbacks. And this is the most common mistake, so you need to make sure you're not doing this. How do you do that? You'll never know for sure. You just need to limit the risk. In here, you don't know. Maybe it will work out. Maybe that will work just fine, and the market will just do this, all right? But if you get to take this trade, be aware that you're not sure that the pullback hasn't been done. And you might be just dealing with a pullback right now, and the market will obviously reach out to higher highs, all right? So be resilient, be patient, but most importantly, learn your goddamn rules and try not to forget them. Try not to bend them too much. You can bend a little bit, but not too much. And certainly not when you're getting to learn those strategies first. When you learn it by the rules. You learn the rules, you apply them, you don't try to bend. You'll bend the rules as you'll get better using them. So right now, what the DAX is dealing with, who knows? All I can tell is that the interesting area for me is the next speculative area I've been highlighting, or breaking down the previous one we've been trading as a support and just reaching out to 23% fib, where there will probably be a range trade, a pullback trade for those who wants to follow the trend. Remember that pullback trades are for experienced traders, or at least intermediate traders, certainly not for beginners. All right? Let's catch up on some other trades. Let's do the job with the SPX, for example. It's slightly, it's pretty much the same in here. Slightly different, but pretty much the same. But let's do the analysis in here anyway. So as you can see, we've got some experienced traders trading here, probably a pullback on the higher time frame, but I mean, we don't care. Don't give a shit about that. But you've got the reversal, you've got the market going in here, you've got the breakout. Sorry, let me just catch up on the gray ones. So you've got the breakout trade, you following up, all right? Do we have a divergence? Yes, it looks like the markets are slowing down, all right? The momentum space, like, yeah, the aggressive bullish pace is really slowing down. So we're probably at the divergence phase. Do we still have the pullback? Certainly not. Here is the 50% context, and we haven't yet dipped below. Same thing in here with the 23% fib. So either today we try to go higher, we'll fail, and we'll have to cause the pullback. Option number two, we'll just keep on going for the divergence. Meaning we're trying to go higher and higher and higher, losing steam each and every time we try until we fail and get the pullback. So we're waiting for the pullback trade to show up right now with indices. At least as long as it hasn't, then there's nothing we can deal with. Rather than you're bullish and you're just waiting for this structure to terminate. That's what's going on right now. The bulls are in control, and whether you like it or not, it's still not the bear's time. I totally missed the bullish trades. It triggered stop loss for me previously, so I just let it go, all right? The bulls have it in control, clap, clap, and next time is mine, all right? That's it. Just wait for your time to come. So in here is just, all right, they're trending. They're probably diverging right now. I don't yet know. All I know is that I need to get to the pullback to make sure that the divergence is dealt with. Once it's dealt with, I know I still have the final excess to deal with. When the final excess will be, as I am an expert trader, I will take the reversal. You won't, obviously. And you'll wait for the market to dip, reverse the context, and you'll try to catch the context pullback in here. I'll take both of those trades. You'll only take this one. Okay? So I hope you really understand that process now. I know I'm repeating myself all over again, but I mean, that's how it is. I mean, consistency is really key in trading. Let's figure out another asset. Gold. Let's try to give it a context. Alright, so gold is a really big miss right now. Let's try to delete prices to make things easier. Up. Alright, so all we care about, remember, is the time the market is going through contexts. So in here was our market top, alright, which has gone slightly higher than the previous top. So here is where the market top actually happened, alright, and that is context resistance to context support, context resistance to context support, reversing with a bearish range context, going in here, reversing with a mature range context. So this is, as you can see, this trade wasn't highlighted, this one yes, and this one yes. So an expert trader will have taken the reversal, the aggressive, the bearish range trade, it will have reversed in here. That's exactly what I've done personally. Then the market makes another dip in here and has been accumulating. We try to break, we have the range breakout, but no way, they just reverses us. So we're back into range right now. Right, we've gone from resistant context to support context. Let's just confirm that information. All right, yeah. So we're dealing with the context right now. So we're back into hesitation. But I think what's the most important thing in here is that anyway, even if we failed this breakout, and that, believe me, that's really fucking rare, because everything points the goal to be higher. Right? It's just, once again, the plunge protection team at work probably just, they don't want that to happen now. So we're waiting for this to show up, but we had a mature range, we had an accumulation, we had everything we needed for bullishness, but just not the right timing. Just like I told you, there are multiple forces in the market, and if you try to think at just one moment that you're really in control, then you really need to flush out that illusion. You'll never control anything, and controlling is not even the point in here. You're just trying to learn some decent patterns and structures, and when the structure shows up, you play the game, even if that means fail is down the corner, because sometimes it will inevitably fail. In here, those who took the breakout, they've been fucked. Yes, they have been, and that's how it is. Sometimes it will not work out, and you have to deal with that. It's not the strategy is inefficient. It's simply that the market is unpredictable, and you fucking need to embrace that information. Accept that. You will fight against that as long as you can. The problem is it never will work. The only thing it will do is, as you try to fight the market, you just end up losing money, and you're not there for this purpose. So, all right, like I said, try to fight. You'll figure out the only solution sooner or later. The only solution is that you let go. You have no other choices. Euro dollar, let's take another example in here. What are we facing? Let's go 4 hour in there, trying to find a context that gives us pretty tradable information. All right, that will be the trend. That will be the time frame. All right, no context alerts. We're dealing with context boxes, with context extremes. So we've got everything we need. So what is this? All right, we got to deal with it. We don't really know what that is. We just need to make sure that this is the end of a movement. In here, you can see 3 bearish things. So this was a bearish range, very bearish range, by the way. We didn't even retrace 61% on the waves. So it's really a range. Right? No trends because the waves are not overlapping. Right? This wave's getting into the previous one, but 3 waves to the downside. This is a bearish wedge structure, typical end of trends. All right, we broke it out. So in here, what is this? Very likely a reverse. It hasn't been highlighted, by the way. I don't know why. It's weird. Normally it should have been. I'll figure out this one. Normally it should have been red colored. Anyway, so here's a reversal trade. You don't know for sure, but you're gonna have to double check with the momentum. All right, squeezing, definitely the type of things that can work a reversal. Not necessarily the easiest reversals, but all right, in here you've got significant information suggesting this was a reversal trade. So as a reverse, you wait for confirmation, you wait for the market to go to the opposite context. That's what we've done, so that's great. Now what do? You're waiting for the pullback. So in here, you put your Fibonacci's. The auto Fibo will put itself in place. It just needs to inch lower to replace. All right now it's just highlighting the global structure, but if we go just a little bit lower, you'll figure out it will update itself. So here's where you get the 61%, 76 probably in here. So it's very likely going to be either bullish range type of structures, which I believe is the most favorable context. I don't really believe that the euro dollar is trending at the moment. I think the euro dollar right now will bullish range, like go in there and find some supports, make high highs, and then we'll deal with it, right? So getting for 61% fib and the context in here would be triggering eventually bullish range trades. If it doesn't, then we'll wait for the 76 below context to trigger neutral range trades, all right? But these are the interesting areas for euro dollar. Otherwise, we would be accumulating in here. Like I said, normally you don't deal with accumulation unless you deal with a mature range, all right? In here, the range is not necessarily mature, so we're just going to wait, all right? Either this is unpredictable way of accumulating, which I believe is probably going to happen. But the second option is simply that you don't know what that is, so you don't deal with it. This is not something you can use to trade. The only thing you can use is whether prices goes there or not. Let's go GBP instead. Pretty significant pattern in here, pretty significantly different pattern in here. So let's delete prices so you avoid having biased readings, and you try to figure out what the hell that is. All right, so you're trying to read out of that. So as you can see, all right, was this a reversal? Very likely though. It hasn't been highlighted, but we very likely had reversals in here. We got the exit structures, the range signals. All right, there you've got the mature range. So you know that the trend is rarely going to range. So it's a very mature trend ranging. And right now we very likely had a reversal in here. So I'm just going to put prices back in the game to figure out where the lowest low here. So it is where that is. All right, God damn it, I'll make it. All right, so here is how the reversal trade has been. It was hard to trade. I don't even know if it was catchable some way. So here's where it got validated, going from the support context to resistance context, breaking a little bit, going in here, range trade. This is where you should have got in, and here is where we are. All right, so now what we can see, we try and trade, still range signals. So does that look like a trend? No, it doesn't. I think we're not yet trending with GBP USD, but we're bullish yet accumulating, bullish ranging, which means we might retrace, but we want to catch up anytime the market makes a 61% retracement. We want to be more aggressively bullish than the bears will be. The bears will less likely break us supports, but we're very likely going to catch up on them. So here's where we are. That's the prices I'm interested in. Pull backing to 61%, and so should you. This is the prices you care about. Let me just delete, by the way, I don't need them anymore. All right. I hope you do understand how these things works. All right. Like right now, if this thing, let's put the price back and confirm our thing. So either this is a range, like a two-wave structure pushing to the upside with a lot of range signals. Option number two, this is really a trend breakout, and in that perspective, we'll just keep on going higher. And this would have been the ugly reversal in which we reverse the trend without making ranges in between. It happens, and believe me, with the GBP USD, it can happen, but you can deal with that. These are rarer structures. Most of the time will range after reversals. In here, if we go bearish trend to bullish trend, and if that is really a trend breakout, and that's it. It's not the most common type of structure, though not the one you should be learning, but these things still happen. All right? Like I said, anyway, I'd rather like to be bullish on GBP USD rather than anything else. I certainly don't want to be bearish. All I'm saying is that if we retrace 61%, I'll be there to catch the dips, simply. All right? I think we're gonna stop in here for today, or maybe USD. No, yeah, USD GPY. I've got something to deal with. Remember that I told you I was waiting for this one to show up. I'm definitely gonna trade it. All right. So in here is a very, very interesting example. So as you can see, probably a trend trade in here. We ranged. We had trend breakout in here. Market is not pulling back, so this could be a sign of a trend. I don't nearly believe it is. I think we're most likely in a range. But anyway, is this a potential reversal? Yes, it is. Even if that is a breakout trend, we would be diverging, pull backing, so that would be final excess. So anyway, I don't know what that is, if that's just an ugly breakout or if that's really a trend breakout. Anyways, I've got enough risk limitations to consider that this is where I can risk limit, where I can put a stop loss, though I can trigger a range trade in here. That's all you care about. Like I said, you don't really give any interest to understanding what the hell goes on. You just want to make sure that this is enough of a risk limitation area for you to get in here and put a stop loss. Though I think in here is where we care. We already have the momentum signals, we're just waiting for the price confirmation. So I'm just waiting for the red triangle. As simple as that. I think this triangle is gonna come pretty much sooner rather than later. So I'm simply waiting for it. Whenever it triggers, you can be damn sure I'm going to take a reinforcement on the USD JPY. That's the game. It's going to be a range trade, which means I get in here, I profit take in there, and I'll keep the rest for my long-term portfolio, my mid-term to long for portfolio. But this will just be a range trade, so I'll obviously have a mandatory partial profit taking in this area. Simple as that. All right, so this is a clear and clean example. This is one of the trades I told you to have a look at. We were still there when I told you this trade will show up eventually. We're at the activation point. We're waiting for the signal right now. Like I said, am I going to take a blind trade? Certainly not. Certainly not. I'm just going to wait for the price to confirm. All right. That's it. That being said, I wish you guys a pleasant week. See you guys next week. Or I'll deal with the MCQ test, eventually trying to release it later this week. So you'll have work to do, and it will probably be range and pullback orientated as well this week. Bye guys.